Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Nova Minerals.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. What we're examining here is a company deep in the junior resource space. Nova is fundamentally a pre-revenue developer.
Right.
Gold and critical minerals.
Right.
And that profile, well, it dictates everything about their financial picture right now. I mean, they show negligible operating revenue, and so they operate at a net loss.
And I have to say, for investors who might be new to mining development, that just sounds like a massive red flag right out of the gate.
It does, but we have to stress this is completely standard for a company at this stage. I mean, they're focused on drilling and engineering, not, actually moving dirt yet.
So the upside isn't tied to current earnings at all.
Exactly. The upside here is decoupled from any traditional earnings multiple. You're investing in future production. You're looking for validation of the resource, key de-risking milestones, things like permits and feasibility studies.
And then eventually the cash flow from production way down the line.
That's it.
That being said, the source materials did flag, a decline in revenue and compressed EBIT margins, which makes sense when you're spending so much on exploration. But how do we gauge financial health when they're sort of bleeding cash for a good reason?
That is the crucial question. You have to look for disciplined capital allocation. And despite all that heavy spending on exploration, there's evidence of stable profitability if you look at their core operational management.
Okay, so things like G&A expenses.
Yeah.
The things they can control.
Exactly. It shows they can run a tight ship now, which is so important because it sets them up for, potentially sharp positive margins once the Estelle project actually starts generating revenue.
Okay, let's pivot to that project then. Estelle. This isn't just another gold deposit, is it? It's being positioned as one of the largest undeveloped gold resources in all of North America. The scale just seems immense.
The scale is, well, it's staggering. We're talking about a land package that covers 514 square kilometers in Alaska.
Wow.
To put that in perspective for you, that is almost the size of the entire city of Toronto. It's just, it's absolutely massive.
But the truly fascinating part for me is the potential that's still on the table. How much of that land have they actually even explored so far?
Less than 5%. Systematically, anyway. Think about that for a second.
Less than 5%.
They have a multi-million-ounce resource already mapped out across 4 large deposits, Corbel Valley and RPM being the big ones, and yet 95% of the property is effectively untouched. And they've already identified more than 20 other high-priority spots along a 35-kilometer corridor.
That suggests a multi-decade runway, really, assuming the geology holds up. And the location itself, that's a huge plus.
Oh, absolutely. They're sitting right in the Tintina Gold Belt, which is a globally recognized, a very prolific gold region. And being in Alaska, that makes it a Tier 1 jurisdiction.
So minimal geopolitical risk, stable rule of law.
Exactly. Permitting in Alaska is complex, of course, as it should be, but it's infinitely more predictable than in many other parts of the world. That stability is fundamental to the whole thesis here.
So we've got scale, we've got stability, but often with these huge bulk tonnage projects, you can run into issues with low average grades, which means you need massive capital to make it economic. How does Nova stack up on the quality side?
Well, that's where the combination of high grade and bulk tonnage really comes into play. It just gives the project so much more optionality and economic resilience.
They aren't locked into just one mining profile.
Right. They can use the high grade stuff to drive early cash flow and then, transition into the massive long life bulk deposits later on.
Okay, let's zoom in on the RPM deposit then, because that really seems to be the core growth engine for them right now. What are the key numbers investors should know?
So the total resource at RPM right now is 1.24 million ounces, averaging around 0.6 grams per ton of gold, which is a good number for bulk tonnage. But the real story, the part that gets the market excited, lies within the high-grade starter components.
Okay, and this is what could drive that early profitability. So what does that high-grade core look like?
They've mapped out about 0.34 million ounces at a really impressive 2.3 grams per ton gold. That's in the measured and indicated categories. But then you drill down even further and you find this super high-grade measured component, 0.18 million ounces, grading 4.1 grams per ton.
4.1 grams per ton. That's huge.
Yeah.
To put that in context for everyone listening, what does a 4.1 gram per ton measured resource actually mean for the economics?
It means margin protection. I mean, many of the world's biggest gold mines start with average grades closer to 1.5, maybe 2 grams per ton. Having a measured resource, which is the most geologically certain category, at 4.1 grams means they have a high-margin, high-return zone ready to go first.
So it lowers the payback period.
Significantly. And it gives them a fantastic economic cushion against, future swings in the gold price once they get going.
That high-grade start is a fantastic de-risking tool for the gold story. But there's another element here, something unique that sets Nova apart from, well, almost every other North American gold developer: the critical minerals exposure.
This is the massive kicker. This is their moat. Estelle isn't a pure-play gold story.
Mhm.
It also hosts a significant amount of antimony, specifically at the Stibium prospect.
And antimony. It's not a mineral most people track, but it's incredibly strategic. What is it used for? Why does the U.S. government suddenly care so much about Nova's supply?
Well, antimony is designated a strategic mineral because it's absolutely essential for national security. Antimony trisulfide is used for military applications like ammunition tracers, flame retardants, and critically, in thermal imaging and microelectronics.
Okay, and where does most of the global supply come from now?
Well, it's a classic supply chain risk story. China and Russia. They control the overwhelming majority of the global antimony supply chain.
I see.
So when you realize the U.S. military is dependent on potentially adversarial nations for a mission-critical mineral, well, the drive for a secure domestic supply becomes pretty urgent.
And that urgency translated into real, non-dilutive capital for Nova.
It absolutely did. That strategic importance turned into a massive financial commitment. Nova secured a U.S. $43.4 million award from the U.S. Department of Defense, the DoD, specifically to fast-track production of military-grade antimony trisulfide.
And that's not just a grant, it's a huge validation of the asset.
A massive de-risking event.
Okay, so that $43.4 million immediately stabilizes the antimony side of things. Let's look at the timeline then. What does 2026 look like with this combined focus?
The focus is really a dual-pronged transition. The company plans to complete the full gold feasibility study, the final mine design, the economics, the capex, and they aim to actually start initial antimony trisulfide production under that DoD contract.
So a transition from explorer to early-stage producer on two fronts at once, that's a huge shift.
It fundamentally changes their valuation proposition.
Now, moving to the financial side, a project of this scale needs a lot of capital. How did they strengthen their balance sheet recently to fund this timeline?
They just executed a successful U.S. NASDAQ U offering, a really strategic move to tap into the big institutional capital markets in the U.S.
Okay, can you just clarify the mechanism there for listeners? They raised it through an ADS offering. What is that?
Sure. An ADS is an American Depository Share. It's basically a certificate that lets U.S. investors buy shares of a foreign company, in this case one listed in Australia, on a U.S. exchange like NASDAQ. This makes it easier for U.S. institutions to get involved.
And how much did they secure?
They raised about U.S. $22.34 million in gross proceeds. And crucially, those funds are earmarked specifically for advancing exploration, finishing those critical feasibility studies, and accelerating early development work. It's targeted capital.
So when we put the pieces together, the fresh $22 million from equity and that non-dilutive $43.4 million from the DoD, does that give them what they need?
It gives them a very meaningful funding runway through the most capital-intensive study phases. The combination limits near-term balance sheet stress. It means they don't have to do an overly dilutive financing right now. They have the cash to turn geological confidence into engineering certainty.
And that strong financial footing is obviously driving market sentiment. The market seems to be skewing pretty bullish recently, anchored by that resource potential and maybe even more, the government backing.
And the drilling results are providing the technical anchor for that sentiment. We just saw results from RPM North that confirmed a big eastern extension of the mineralization. The intercepts were genuinely impressive.
Can you give us the specifics? Which numbers really stand out?
Well, the core intercepts included things like 108 meters, grading 1.1 grams per ton gold. Fantastic width and grade. But then you also get these high-grade pockets, like 7 meters at 8.1 grams per ton gold.
Wow.
These results aren't just encouraging. They're the hard data that support future upgrades to the overall resource.
And you mentioned that the ADS offering price, the US $6.83, provides a clear reference level for investors.
It does. That's the price institutional investors were willing to pay in a fully marketed deal. It often acts as a pretty robust technical anchor, or at least a psychological support level for people looking for an entry point. It signals that sophisticated money validated that price.
Now, we have to inject some friction here. A project this big, regardless of the grade or government backing, has to carry significant risk. What's the central bear case?
The primary risk, as with any major development project, is execution and funding. Getting through the feasibility study is one thing. Actually transitioning to full-scale construction involves, well, complex permitting, infrastructure build-out, and huge capital expenditure.
And those steps are historically where you see delays, cost overruns.
Exactly. It's a risk across the entire mining industry.
So you said they're funded for the feasibility study, but the full build-out of a multi-million-ounce mine in Alaska that's going to require hundreds of millions, maybe billions more, where does that capital come from, and how dilutive could that be?
That is the multi-million-dollar question, isn't it? The financing for construction will likely be a mix of things. Large debt facilities, maybe a streaming or royalty deal, and yes, likely more equity. If the market is poor when they need that money, it could lead to substantial shareholder dilution.
And we also can't ignore commodity price sensitivity. The project's value is hugely leveraged to the price of both gold and antimony.
Absolutely. A sustained downturn in gold or a sudden supply glut in the antimony market would hit the expected returns, making that next financing round even harder. And of course, there's always exploration risk. Those amazing 8.1 gram per ton intercepts are fantastic, but you can't guarantee the next drill holes will look the same.
It sounds like the typical risk-reward calculation for the sector. But you did note that the existing multi-million-ounce resource gives them a margin of safety.
It does. I mean, the size and quality they've already proven up means this is a highly valuable asset, even if the next few drill holes are just average. And critically, remember the scale. Over 95% of that huge land package is still unexplored. That's pure blue sky optionality that isn't even really factored into the current valuation.
Okay, so given the high grade, the funding, the risks, what three key events should our listeners be watching for over the next 3 to 6 months to see how they're progressing?
The path forward is very catalyst-driven. So first, watch for more assay results. Specifically, news from the drilling at RPM Valley, Corbel, and especially Stibium. Strong results there could directly lead to resource upgrades.
Second would be updates on the 2026 feasibility study.
Yes. We need progress reports on things like metallurgy, how easy is it to get the gold out, the final mine design, and of course the project economics. The NPV and IRR figures, those are the numbers the big money will be looking at for the build-out.
And finally,
pay close attention to progress on the DoD-backed antimony development. The government is pushing this. Any news on final permits, plant design, or hitting those initial production milestones? That would be a massive non-gold-related catalyst. It would prove they can execute and generate early revenue.
that is a tremendously dense and exciting catalyst path.
It is. I mean, ultimately, the investment thesis is this. Nova offers you leveraged exposure to a massive high-grade Tier 1 gold asset in Alaska. And that upside is uniquely amplified by this non-dilutive DoD-backed critical minerals business. With solid capital backing for this key study phase and a really dense visible path to de-risking milestones, the risk-reward profile, I think, strongly favors investors who are geared toward a long-term position here.
That's all the time we have for today's analysis. If you enjoyed this conversation and found our insights useful, please make sure you subscribe to Smart Wealth with Joshua. We'll be back tomorrow with another stock analysis.